Alrighty then, how we doing? Good morning. Hopefully you guys are having a fantastic Monday morning. I'm excited to be back. It's been a minute. I think, what was it, Tuesday was my last day. Last week before I went on a little vacay with my family. Got back last night and happy to get going again. And yeah, I don't even know, honestly, how to start this stream with everything that's transpired over the weekend. It's been crazy. It's been a very intense week with the attempt on former President Trump. And I don't know how that's going to affect the market, if I'm completely honest. I don't know. I'm a little indifferent on if I'm going to actually be taking a trade today. The one that I've been watching was this one right here. It was a 5-minute. I just put that up here. I like that for a 5-minute. But honestly, I don't know what the bias is at this moment. I'm a little indifferent on the bias, especially if we start with higher time frame. And that's really where I start all my analysis from. I added a couple things. As you can see, I worked on some of the details. Somebody referenced an indicator that puts the time frame and the and the chart details on my screen. So you guys should always be able to know if I'm on the 1 minute, the 30-second, the daily. So that should make it a little bit easier for you guys to keep track. But when we're looking at the daily, I'm not sure where we are. We're in between the previous day's candle, so Friday last week. So we obviously want to put our previous day low and previous day high on the charts. And so we'll do that here real quick. Actually, that's not what I want. So we're going to mark this up here. Do a little bit of okay, previous day high, and we also have previous day low. Now we do have one thing that we do have. We have Jerome Powell speaking, I believe, have Jerome Powell speaking or doing something around noon. So that's all I know for that aspect of it. Okay, so let's put this here. That was the wrong one. All right, so we got our previous day low and our previous day high on the charts. And I'm not even going to put the previous week. So the previous week, obviously, low is the same. The previous week high is way up here at all-time highs. I'm not going to put that on the chart. So we have our dailies, previous day high and low. And now let's drop down to the 4-hour. Let's see what we can identify here. On the 4-hour time frame, the only fair value gap that was interesting to me was right here, and we redelivered from that last night. At the opening, we went down there, we swept these lows, and basically have been creeping higher throughout the evening. So that is kind of where we are sitting right now. We will we got market open in 3 minutes. Again, I'm watching that, but on the 5-minute time frame, that means the close will be at 9 a.m. or 9:30, and I'm not going to take an entry right at open. So if this closes above here at 9:30, I'm not going to be taking that. Now, let me tell you what I have on my chart so you guys can follow along. I have on my chart this high and this low. I have a Fibonacci tool to find out where equilibrium is. Okay, this is equilibrium, this red line. So I'm keeping track of where that is. Actually, I might modify that and make it quarters. I think that would be better. I don't know if it's gonna show up on that. Where is that? Yeah. I don't know what's gonna happen at open, to be honest. All right, so here's, wait, that's not even open, guys. Look at this. Look at this. Not even open, and we're getting some. We're gonna sit. We're gonna sit on our hands. We're gonna see what happens here, because that's that is very. I'm not sure. Now, also, I did read when I was opening my Apex, Trade of 8 is down. I'm not sure exactly how that's going to affect people's trading. So just keep that in mind. If you use Apex, if there's any issues, you might have some. What's up, trades? For fun, how you doing, man? Hopefully you had a good weekend. Despite the things that have happened, I don't know where anybody's political leanings are, but all I can say is in no situation should anybody's life be in danger. That just pisses me off so much. So yeah, I think that'll be the only comments that I really make. I mean, I probably, if somebody else has questions about it, but I'm probably not going to make any more comments about it. It pisses me off quite a bit, to be honest. All right, so opening here's in 2 minutes. I have quarters up. Now, I'm just doing this just to get an idea of what's happening here. I'm not really going to teach anything on these quarters quite yet. I don't use them frequently enough to really be able to teach effectively, in my opinion. ICT talks about them all the time. I'll use them to find out if I'm in extreme discount, which would be down here, or extreme premium, or if I'm in discount and then in premium. So you have these ranges to see where price is going to do. You'll also see, I guess I am doing a little bit of teaching on it. You'll find out major fair value gaps will align with some of these key quarter levels, as well as order blocks and so forth, swing highs and lows. So I like to just see what's going on with it. Okay. Let's drop down to the 1 hour here. Wait, this one was not a. This one was the 4 hour. All right, so here's open right here. We've already redelivered and have been filling this 4 hour time frame. I don't know what is this. I'm gonna take these off. I don't want these. There's just too much detail in here. This 1 hour there. We did the 1 hour there. So I did trade last week on my own from my phone, and I will tell you, man, what day was that? The day we had CPI. Price action was beautiful. Price action was on point, man. I mean, it was like you couldn't do no wrong. If you were on the right side of the trade, man, it ran. Fortunately, I couldn't do any of my copy trading, but it was fantastic. It was fantastic. It really was. All right, let's drop down to the 5 minute here. I just want to see what's going on. There's not anything here in the 5 minute. We'll have nothing in the 5 minute for us to really consider. 15 minute, we do have 15. We got 15 minutes before it closes, so I'm not even going to look at the 15 minute. But it does look like we're going to have some bullish activity here. Let's go up to the 2 minute. Let's look at the 3 minute. Okay, the 3 minute looks nice here. Now, because Pal is because Pal is speaking, you have to decide what are your rules? Are your rules I'll trade before that, I'm fine with that, or do I want to put more risk on the table? Here's my thoughts. Is with everything that happened all over the weekend, as well as potential more volatility because of that, I want to see how trades actually play out first before I decide what kind of risk I want to put on. So in 25 seconds, if we close above, I'm probably not going to take this. I'm going to just watch it and see what happens. It doesn't look like it's going to close. We got 17 seconds left. All right, so just straight up consolidation right in here. A lot of manipulation happening. Let's drop back down. Just not sure what's going to happen, guys. I mean, I'm a little uncertain, and I just want to let the market work out its kinks so that we can find something that's high probability. Okay. All right, so with this 3 minute is now invalid because we already grabbed these equal we just ran for these equal highs. We should hit those. There it is. Okay, so I'm going to drop down to the 1 minute again and see what else we got here. Okay, we still have the 5 minute here. Equal highs ran on the 5 minute. You see these relatively equal highs right here, and what did it go into? A fair value gap. So we should see a decent amount of resistance right here. When you have equal highs with a fair value gap, you should see at least a speed bump. If it wants to go higher, we'll see a speed bump, and it will continue higher, or we'll find resistance and it'll turn here. The 1 hour did find this support here on this fair value gap. So the 5 minute just did close above, but we really can't do anything about that because we already grabbed these equal highs on the 5 minute. So this 5 minute fair value gap becomes irrelevant to us except finding support. So if this candle comes down, we want to see it find support here, right? If it finds support here, we could see it continue to push higher, right? That's actually how ICT really uses his inversion gaps, is he'll wait for the close above, then for it to come back down into it. Now the 5 minute is just too big of a time frame for you to really make when it stabs for the first time to go long. You just don't want to do that. It's too, I mean, you got 5 minutes before that candle closes. So you would want to go down to a lower time frame to really analyze and figure out, are we going to find support here based on the structure you see on the 1 or 2 minute. All right, 30 second did close below. I'm not going to take this, but based on how choppy the market is and how wicky we're seeing price, I'm not going to take anything right now. I'm going to let price work itself out. But I want to see right here with our first close below. Let's see what happens right here. All right, so this is our first clear inversion gap close without grabbing any liquidity. So let's see what happens here. This is basically my sign to find out, all right, do we expect decent price action here? This is our target for break even, to move our stops to break even. If it does not hit, what does that tell us? What does that tell us about price? This technically is not even a break-even trade yet. We need to see this hit, right? We'd move stop to break even as soon as we hit here, okay? Okay, we didn't even hit that low. That stop would be to break even. So this would be in a break even trade. Because as soon as I would have come below this one, I would have want to move my stop to break even again. So this is telling us, this 30-second move right here, telling us it doesn't want to hit us, tell us that either one thing, we're in consolidation or we have really choppy price action today. So at this point, I sit on my hands, I wait for more information, more details. I would not want to, technically this, if you didn't move your stop to break even, this trade is still valid until we close above this, but I would not be personally holding on to this at all, okay? So we made equal lows there. I take that back. There's one more thing that this tells us, okay? It tells us one, that we could be in consolidation. 2, we might have choppy price action. Or 3, it could be a very bullish reaction. We may really want to move in the opposite direction. And if that's the case, we need more information or a model to show us that we want to continue that way, right? This alone is not a guarantee that price is just going to keep moving higher. It could be what's the word I'm looking for? I don't know why I always struggle over these words. It could be something that we use as secondary evidence that price wants to move higher, but we need to see our model show up in price action, and we don't have an inversion, we don't have a breaker, so I don't have an entry. We haven't grabbed any major liquidity, so I'm sitting out until we grab major liquidity, which is this. Why is that line there? That's 50%. Major liquidity is going to be, or higher level of liquidity is going to be this high right here, which we just grabbed. Okay, so we just grabbed some liquidity, and we've hit the last fair value gap before this 5-minute order block. Okay, so we just came into this fair value gap here. Now the other thing I have on the charts is this new week opening gap. If you go to the bottom right, you'll see this regular trading hours or electronic and regular trading hours. Oops, let me do that on this one. Okay, so we have this gap right here. I'm watching to see if we want to fill this gap. This would be the only indication why I would want to see a short move. I would be, especially with these equal lows sitting right here. Now that we're getting more context, we have equal lows, and we've swept a little bit of a high. I want to see if we can get some more of this some liquidity from the previous day, and then I would be looking to target the midpoint or the consequent encroachment of this opening range gap. So at this point in time, I think I could say I'm bearish. I want to look for a bearish, let me rephrase that. I want to look for a bearish move into this area, filling this gap. Okay. We could close the daily gap around 2,686, would be right here. The daily gap, Yes. I want to see what happens here. So we're still on the 1 minute. But I'm gonna fill this in here real quick. I usually make that yellow. All right. So our first sweep of liquidity has been right here on this 5 minute. This was a sweep of liquidity. Now we want to see how does price want to react based on this sweep of liquidity. That was buy side liquidity. We'll call that BSL, buy side liquidity. And we want to see how price is going to react here. Okay. We got multiple fair value gaps here. We cannot do anything with that. We can't go short with multiple fair value gaps. We go to a higher time frame. There's a 2 minute. So the 2 minutes the only one that you could potentially use, which closes in 14 seconds. Let's see if it closes and is aggressive. I might do that. I think I'll take a risk on that. Oh, temporarily halted, affected. Order 1 market zone. Yep, my order was rejected. My order was just rejected. So there must be a continual issue with I still have an issue with 23. That's probably going to work out, guys. All right, so if you are able to take this trade, you're targeting now stops to break even at that point. That sucks that I couldn't take that trade. I would have been in this. I would have gotten in right there. Okay, so you would have moved your stop to break even there. Would be right there, and this would be your final TP was right at this 50% right here. Let's see if we can get it right there. That would be unless we're stopped at stops at break even. You've taken profit at 12 handles. You'd be targeting this right here. All right, there's your profit target. 24 handles. You guys should have been able to get out of that if you were able to. Unfortunately, all my order was canceled, so it did not let me take any trades. And we were warned about that with Apex. I mentioned before that there was an Apex potential issue or Trade of 8 potential issue, and I use Trade of 8 on my accounts, which that sucks. That would have been nice. That would have been a nice 20 handles. On all my accounts. Dang it, that sucks. Yeah, that sucks. All right, so what did I target here? Look at this. Remember, this was our opening range gap that I referenced before. This is what ICT calls his opening range gap. Excuse me. And he will say target the 50%. That very often you'll see it run to the 50%, if not the whole thing. So you'd want to take some more profit at that, which is also around the midnight open. I don't know why it let me try something here. Let me log out of all these. All right, that's a very bullish reaction. We did just close. Let's see if we got 30 seconds here. So the 30-second closed above. I'm gonna do a test trade just to see if it's still keeping me in or out. Yeah, my order, I've gotten both orders rejected, so I'm not able to take any trades today because I use Trade of 8 as my broker. They are saying that there is issues with Trade of 8. So this is a very bullish move. I'm expecting we're probably going to run these highs. So I'm going to tape read these. We'll log out of this and we'll go to a, we're going to do a paper account because I think we're going to have another opportunity here. What does a 2-minute look like? All right, so let's see what happens with this 2-minute. Okay, so we had our first win there. I'm going to get rid of this 5-minute. I'm looking at this 2-minute right here. If we close above that in 48 seconds, I'd be looking to go long. We swept the lows. Now we're looking for a singular fair value gap that we inverse or that we disrespect. And if we close above it in here in 30 seconds, that would be an indication that we may want to go higher. This is the type of trade that I would want to take, right? So we got a 20 handle win on the first trade. Let's see what we can do on here. Obviously, if you've made some profit already, you would want to either reduce your size or be done. Don't try to be more aggressive and try to make more profit. That's where you start making mistakes, and it's not a guarantee that this actually turns into a win. So you just need to be very careful, especially if you have profit. I like this order block sitting in here. Let's see if we close above it. If we close above it with this order block sitting right here, that would be, I would like that a lot too. Man, that sucks. Not being able to capitalize on some of that. So we came into this opening range gap a little bit, but we didn't fill it all the way. It's not guaranteed that it has to fill it, guys. So don't get so stuck on this. I'm looking for the initial push into this, and then I'm willing to leave it. But it may want to do it. Here's a 30-second inverse. This is a B plus. This is a B plus because we already grab liquidity. If we want to go lower than this, if you're bearish, you would definitely want to take this trade. If you're bearish, this is definitely a trade that you would be looking at taking. So we're gonna just do this as if we were bearish. Okay, if it closes below, and it technically did. So man, I don't like that reaction. We're gonna go short anyway with a paper trade here. This is a paper trade. This is based on us closing this 30-second. If you're bearish, this is the trade. This is a trade that you'd want to take. If you're indifferent, you would want to wait. If you're bullish, you would not want to take this, right? This should run at least to here if it's going to do so. So stop is going to be sitting here. I don't know why they're sitting there. And you could either take profit here, or you can move your stop to break even at 66 handles. 66 ticks, I should say. Okay, I'm going to see if there's what it wants to do here. So nope, it doesn't. It wanted to run up the other way, and it closed above it, so that's a no trade. This is what I was initially bearish, and I think I still am. But why did I call this a B plus to begin with? Because we already ran these lows right here. This low right here, we already ran. Because we already ran that, this is basically new liquidity down here, and it doesn't have to be ran right now. it could run the complete other direction. It may want to go lower, but that's why I call that a B plus, is because we already swept liquidity and makes it not an A plus type setup. So I did that on paper, not because I would have never taken that trade on my live account. I did that just to play it out if it was a bearish move. And my point in doing that was to show you how price is moving, what you would be doing in case it was going to run in your direction. But it didn't. All right, so I had this 2-minute on here. So I'm not trading. My account's not working. So only things I'm doing are paper trades here. Now I like this. If this closes right here, we're leaving an order block. And if we close above here, we got 7 seconds. Okay. It did not close above this on the 2-minute, so there's no entry. Trades for fun. I saw that you had some messages retracted. Did you remove those? Got it. I don't think I read them because I was watching the market. So I don't know if you had any specific questions on any of those. Based on the volatility and the lack of follow through, guys, this is not an A plus trading day. This is a B minus. I mean, after seeing some of this price action play out, I'm not as enticed to make any trades. What's up, Mags? How you doing, my friend? The only trade that I would have been in would have been a 20 handle win, and Trade of 8 did not let me get in the trade. What was it? What was it on the 1-minute or 2-minute? It was on the 2-minute, and it was this trade right here. It was this inversion. We closed that inversion targeting these lows here, which was 20 handles. So I don't know if anybody else was able to do that or get that, but I would have been done right after that. I would have been done. There would have been no reason for me to trade anymore. I'm thinking we're probably going to move higher here. This is 2-minute. Mag, so we have Fed chair speaking, today. So do you think until noon we're going to be choppy? 100%. That would be the main reason why I wouldn't trade. Here's the thing. If you're going to watch price and you want to trade, I mean, noon is a ways away, right? It doesn't have to be choppy. It could be decent price action. If price action was decent, you sat. What's up, Mark? Thanks. I appreciate. I had a good trip. Here's how I would approach this, Mags, based on your question. Do you think it's going to be choppy till noon? The answer is maybe. You need to go into the market sitting down and watching price action. And you need to look for your setups. So there was a setup that we looked at and it didn't play out. That was my first indication. It was on the 30-second. I saw this 30-second inversion close right here, We had this inversion close right here, okay? I watched this close and I'm like, okay, we should be running for these lows right here. But we didn't. Was it that one? No, it wasn't that one. It was this one right here. I was watching this 30-second and I see price moving right now. I'm not going to refer to that at the moment. I want to get to this. I saw this close below right here and I thought, well, we should run this low right here. We didn't. We made equal lows. So that tells us one of three things. Either price is choppy, it tells us price wants to move the other direction, or it tells us that, what was that? There was a third one. I'm drawing a blank. It's either, it could just be choppy overall. Price might want to move in the other direction, or it might just be, we might be consolidating. That's the third one. Sorry. We might just be consolidating. Well, looked like we were consolidating here. Yes, that could be the option. Well, it looked like it wanted to run the other way. So now it goes, okay, well, maybe we're bullish. Well, when we had these candles right here, and if you look on the 1 minute, that's a giant candle to the downside. This is very aggressive. So immediately during this candle right here, I'm thumbing through my time frames to determine what has the potential best setup. And on the 2 minute, we have this beautiful setup right here. Okay. So when I see this aggressive candle down and I know we still have news forward, I'm still going to take this. Okay. I'm still going to take this. And because of how aggressive this was, it inversed this fair value gap and it swept these lows. So meaning I was able to move my stop to break even very quickly, and it turns into a risk-free trade. I always want risk-free trades. And then I'm holding to this low and I'm seeing if it's going to actually run this low right here, right? And it did. So that was a 24 handle move, and that was before news, or that was before the Fed chair was speaking. Now, since then, we've been getting price action that's not my favorite. Here's an inversion right here that just traded. We didn't grab any liquidity down here, so it's already a B minus, but it makes equal highs here. So that means I think we should probably run these right now. But you just have to look at price action, and over time, as you sit in front of the charts and you know news is coming up, take note of what the market is looking like. Maybe you don't take the first trade, the first setup you see, and you just keep your hands off and you wait to see how is price going to react with news still being ahead. Is it an A plus setup? Hang on, I gotta cancel this phone call coming in. There we go. Sorry about that. So you just don't want to take the first trade when you know there's going to be news. Be patient. Wait for the A++ type setup to make sure that it's a legit setup where you're going to have a good opportunity. So this did run these equal highs here. We bounced off of this fair value gap, and we ran this. We swept these equal highs. So price action is being decent. We just need to make sure we're on the right side of the trade. I think PM will be better. PM will be better. Really, you want a significant key level ran, a key level swept, and then you want to see price run the other direction. That's really what I would be looking for. But really, we've been from this high to this low since we did that 20-point move. We're just playing inside this fair value, inside this price leg. So if I'm looking for a move, I'm waiting for this high to be ran or this low to be ran for me to tell me that price is ready to move aggressively in one way or the other. You could trade, you could do this 1 minute fair value gap, which it still is in premium, and play the sweep to this high, but that I would call that a B minus type setup, so it's not ideal. You bet, Mags. I've tried to take two trades, or I wasn't able to take this trade because get that 20 points because it was canceled on my account because they're blocking all entries on Trade-O-Vate right now because there's some issues with Trade-O-Vate. So if you have Trade-O-Vate, be aware that that may be an issue that may cause your executions not to be executed on. And that, I mean, because of that, I'm probably not going to be taking a trade today. I did take some trades last week. The CPI was freaking amazing. Had fantastic price movement, and it seemed like you could do no wrong. And I only could trade my individual accounts, but I did really well for that trading day, and that was all for my phone. I don't like trading from my phone because it's harder to see multiple time frames. I mean, I have 4 screens or 4 charts up that I can look at one given time, but I can't do that on my phone. So that's why I don't like trading on my phone. All right, let's just see what happens with this. We're going to close above this. We did not. It at the last second, it rejected it. So no close above this. So the target that I would be looking for is not this high, but it would be this previous day high. That's really what I would be looking for, but that's still a ways away. That's almost 100 points away. So that's really my large key level that I look for price to hit. And if it doesn't, it could be an inside day. If we go to the daily, look at the daily here. This is the previous day. I'm going to remove this. This is right here. This is our previous day high and our previous day low. There's a high probability we run one of them. If you look at price action, look at price action from previous days. Okay? The day after will usually run either a high or a low of the previous day. So this candle runs the previous day low. This candle runs the previous day low. This candle was an inside day. It neither ran the low or the high. Maybe it swept it by a tick down here. I'm not sure. Let's look. Low is 728. Low is 726. So it did. This one swept the low. This one swept the high. This one swept the low and the high. This one swept the high. This one swept the low. This one swept the high. High, 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 and low. So there is a high probability, guys. My point in just being repetitive in that is there's a high probability we will run either the high or low. So if the target is the high, okay, you can play a move up to this high, or you could play a retracement from the high. And that is some of the easiest type of trading you can do, right? Is looking at your previous day high and low. And then once we run one of those levels, then you look at finding your model within price action. You just don't go long or short because you don't know if it's going to keep going higher or if it's going to drop. But you watch price action and you look for a setup. You look for an inversion. You look for a breaker. You look for a model 2022. You look for the model that you trade, and then you trade out because it hit a key level. And the most obvious key levels are the previous day low and previous day high. But it could take us all day to get there. I don't know when it's going to get there. So that's why I look for other things in price action that tell me that we may want to run. So why we ran this high right here. Okay, so this is just a short-term high. Well, it's actually the highest high from over the weekend. So this is the high. This is the highest high we have. And so we ran that high, and then we made an aggressive candle the other way. That is why I took the trade. We ran buy-side liquidity here, and then we made a very aggressive candle in the other direction, and we had a setup in the 2-minute. That's why I took that 2-minute, or I would have taken that 2-minute if it didn't cancel my trade. Morning, John. How you doing, my friend? Hope you're doing well. Hope you're doing well. I did. So this weekend we went to an Airbnb. Not an Airbnb. There's a difference. I'm going to say right now. There is a difference between an Airbnb, which we all know, and a bed and breakfast. We went to a bed and breakfast, and it was fantastic. The people that lived there, they lived in the basement. The wife was a professional masseuse. The husband was a professional chef. They made the food right there, all from scratch. We sat down. They gave us dinner. Breakfast was included. Guys, it was great. It was around the Lake of the Ozarks. It was a really, really good time. Kids got to stay with their cousins for a few days. Got back yesterday. We recovered a little bit, and now I'm ready to rock and roll. I'm really bummed that my trade was canceled. That would have been nice. That would have been a nice win. All right, so the first time we broke above this 1 minute, we already ran the highs. So any opportunity here was invalidated because we ran the highs right away. I am looking at this as a breaker here. This could be a breaker that sends price higher. Oh, I bet you Colorado is gorgeous. I was telling my wife I want to take my kids whitewater rafting. This would be the time to do it, man. And Colorado is perfect for that. I do want to say, guys, I want to thank those who actually have used the code at the top for the 80% off on Apex. These streams are free. I don't charge anything, and a few of you actually purchased some, so I am grateful for that. If you haven't or you would like to use Apex, that's what I use for all my trading. I have multiple accounts, so I have 9. I have 9 performance accounts that I'm trading with, and you can copy all those trades from Apex. So I really appreciate you guys, the support in that way, since it doesn't cost you anything, obviously, except for the cost of the eval account. So if you haven't tried it, there's the link above. And I really appreciate for those who have. Thanks for the support. 5 minute may close above the fair value gap at 668. 5 minute. Let's jump to the 5 minute here. Sorry, I was on the daily. So that is here, way over here. Where's price at? Or I don't see, Mark, I'm not seeing that 5 minute there that you're referring to. 5 minute fair. Was that what time, what day and time was that 5 minute fair value gap? I'm not seeing anything here. Price is sitting right here. Is it a 15? Yeah, I see the 15 minute. Here's the 15 minute. Here's the 15 minute right here. Now, I'm not too yeah, if we close above it, that will be an indication we move higher. But really, if I'm looking at a level, a fair value gap, it would be this one. And I'll tell you why. Okay, I like that one more than I like this large one. Okay, I like this one more than I like this one. This one tells me, hey, we may move higher, but it does not give me an opportunity for an entry. Okay, I'm talking 15 minute. If it's on the 5 mark, I'm missing it. I apologize, but I see something that I want to discuss. This is a 15 minute here. This tells me, oh, okay, we're probably going to see at least some higher prices, whether it's wicks or it's full-bodied candles. This fair value gap right here is overlapping with something. It's overlapping with this candle right here. And if we go down to a 5 minute time frame, my guess is it's going to be this is a mitigation block. So a high, low, lower high, low. This is what ICT would call an order block, where price will come up into here and can find some resistance. I would want to see price come up into this level here and then turn. That is what I would want to see. I would want to see this 15 minute respected and see if there's even a 5 minute within it that I could use as far as my technical analysis. And there's a 5 minute sitting right here as well. Okay, so there's a 5 minute overlapping with this 15 minute. So this is what I would be looking for as a key level, because it's overlapping. This fair value gap is overlapping with another PD array, with another premium PD array in the form of a mitigation block. High, low, lower high, and it breaks lower. Now if we go down into the 1 minute time frame, let's see if there's anything else here. Okay, now this is actually a breaker. We have a high, low, a higher high. This is a breaker now. This right here would be a breaker. What I would consider is a breaker. And it's right in line with these two fair value gaps. So this is, or there's even a breaker here. Okay. Now I'm not saying we should use these. I'm using these as reference to overlapping PD arrays that makes this attractive to me. Okay, so you were talking about the 15 minute mark. Okay. So there is overlapping PD arrays at this 15 minute, 5 minute, you have a mitigation block and you have a breaker that's overlapping. So this is really what I would be looking for when I'm looking at where does price want to run to and where could it find resistance. This is what I would be looking for. If it breaks above this 15-minute here, this big one right here, that tells us maybe higher time frame order flow. Okay? So that could tell us we may want to move higher. And move higher maybe to just this fair value gap, or it may move higher than that. This just tells us that we could see price action move in that direction, but I'm really looking for the other one that has overlapping P arrays, because this one doesn't have an overlapping P array. This one does not have an overlapping P array like this one does. Okay? I know there's an overlapping P array right here because of this down closed 15-minute candle. That tells me that there's something going on here in a lower time frame, so I'm going to drop to a lower time frame to investigate it. And that's what I see. Now, ultimately, if we come all the way up here, I'm honestly then going to look for this previous day high to be ran. Okay? That is what this is. To me, this is more important than reversing here. I would still look at going short here, but I would really be cautious because, man, we're so close to this previous day high. We didn't run the previous day low, so I would expect that this should be ran. Not very often do we not run a previous day low or high. There are days that it does that. Those are inside days. And then that tells us the following day will be a very explosive day. So we just got to, this is how you kind of put the pieces of the puzzle together. Okay, I'm going to remove some of these details here. Now, price action here is just disgusting. You should not be trying to trade any of this. Even though we broke above this. Okay, if you were to take this fair value gap, and I'm just using this as an example, Mark, I'm not saying you took this. I'm not saying you don't know how to trade. None of that. None of that at all. But if somebody thinks, oh, well, we just inverse this 15-minute, that means we're going higher. You do not get in long here. You do not get on the close above that. So that close was at 10:15. That would have been right here. Okay? That was right here. So I would not get in long right there because it could retrace all the way down to here and then still go higher. You have to drop down to a lower time frame, look for a model that confirms the order flow is bullish based on what your idea is of it closing above that fair value gap on the 15-minute time frame. So you have to start putting multiple pieces together. So next time when you're looking at price and you go, oh, well, we may close above this level, take it a step further. If it closes above this, where could it run to? And is there any area that I would be interested in? Just because it closes above does not mean you take a trade. It just tells us the potential order flow. It could retrace all the way down into this stuff in here and then move higher because we have lower time frame fair value gaps that it won't want to rebalance. So that's how I would take. That's how I look at that. I still would be looking at this. I want to see what happens in this 15-minute and 5-minute that are overlapping with a bearish breaker. Now the bearish breaker, I want to go back to that for a second. I want to see the time that this formed. So this is at 4:55. This wasn't done in regular trading hours. So I do like it. Do you guys see this small 1 minute? This is just an idea. I want to see what happens. This was the initial breaker, high, low, higher high. That price broke below, and then we came up into it right here. This candle right here at 15:14. If we look at this high and we align it with this candle over here, which is the breaker low that I'm referring to, look at how it overlaps almost by the tick. This was the initial breaker that pushed price lower. That's how I would see that. So I'm just curious on if this breaker is going to be what we refer to when price comes back up to it, and not these other ones that I've outlined, this one and this one. This is just me. This is me just doing my thing. Me asking questions to see what breaker is the alpha breaker, right? We have a breaker here, we have a breaker here, we have a breaker here. Which one's the alpha breaker? Which one's the top dog that price is respecting? I have a hunch that it's going to be this one, because this was the initial breaker that brought price lower. But I have not back tested that. So it's something that we would want to keep an eye on. I'm just going to mark it out here. At this point, guys, what I'm doing here is just evaluating what my options are. I'm not interested in taking a trade off these. This is me for my own education. And you see this price action right here, guys. Look at all these wicks. I'm on the 1 minute. I don't like to see that on the 1 minute. If I see this, I'm staying out. So whether or not any of these three levels for the breaker hit, I'm not interested in anything, because this is trash. This is trash price action that we want to stay away from. On top of that, it's Monday. We had a crazy weekend, if you know what I'm saying. Events that are unprecedented, and we still have news at noon, or a Fed chair speaking. All right, let's see. I'm just curious. Let's see what happens. Where does price want to respect? Thanks, Mark. I'm glad that you like the way I teach. That's encouraging. Sometimes I'll listen to myself and I think I repeat myself way too often. And if you think I do, it's okay. Thanks for, I believe you. I think sometimes I repeat myself too much. Wow. Okay, with this big push right here, look at this wick right here. I want to see what happens. If this candle is a bullish candle and we close above these other bodies, that's a bullish reaction, and I think we should extend higher into these levels here. Thanks, Trades for Fun. I really value that feedback. But why do I like this? Because we faked the other way, and I called this before we started seeing this big reaction. We saw this fake the other way, and then we went from a red candle to a green candle. So this tells me we have higher prices to go, and I think we should relatively soon see prices come up into these levels here. Here we go. There's not an entry for us. This is just us reading price action, and I'm doing it out loud so you guys can learn. This is a signature and price I'm looking for, where we see a wick and it closes green, and it doesn't close in line with these other ones. That means nothing to me. I wanted to see it close above the highest closed body, which is right here. So we closed above that. Bullish indication. We should see prices come up into these levels here. Okay, so we went into that right there. We stayed underneath on the discount portion of both fair value gaps, and this so far is the candle that we had the reaction from. This, the initial breaker from Friday that I pointed out when we were going over those details. Obviously not very strong. You would not want to go short right when it hits it that first time, because this is very bullish price action. And it may look to blow through that one as well. When I see price action like this, I don't care how, I'm not going to be going short when we see a breaker hit like this. That's just too aggressive, and it tells me we may see higher prices, and at that point, I would be looking really for the previous day high to be ran. We do have some equal highs here on the 5-15 minute that are sitting right here. You can see these equal highs right here. So let's mark that out with just this right here. That's some previous, those are equal highs. This line right here. We'll call that buy side, just buy side, but those are relatively equal highs. But we can see we blew right through these breakers, and technically, we have not a 15-minute candle. We still have 13 minutes left on this candle. So the way I would treat this now is I'm getting rid of these breakers. I don't care about these. Okay. Is I'm looking at the 15-minute and the 5-minute and finding out where the body closes are. Do we just wick above this buy side? Are these equal highs and then close down in this fair value gap? Or are we wicking this and closing above this, which tells me that we may still want to run for these previous day highs? Okay, so now at this point on the 15-minute, I'm waiting for the close on the 15-minute, which is in 12 minutes. If I drop down to the 5-minute, I got 2 minutes left to see if we're going to close above this 5-minute fair value gap. Okay, that is what I'm watching right now. I'm trying to determine what the future order flow is by where this candle closes. If it closes in this, do I go short? No. It means I go into a lower time frame to start looking for a setup that may support that idea. You do not just go short when it closes within that fair value gap. Okay? Because it could just on the next candle then close above it, right? We want to look at that. The change in state of delivery, if we want to wait for a true change in state of delivery, it's going to be a candle close below this candle right here. Why this candle right here? Because it is the first candle that came into this 5-minute time frame. If we go to the 15-minute, this is the first candle that came into this 15-minute time frame. Okay? So if we are going to see some bearish price action, I'm going to want to see this level ran, or this level closed below, to tell me that we have a change in the state of delivery. Okay, this would be, where is it? This is my CISD, my change in state of delivery. That's what I would be looking for if this, in fact, is the reason why we go lower. We may not. We may push all the way up to here. So I'm keeping track of different things on different areas to see what price wants to do. Now I'm putting this on here for you. I normally wouldn't put this on here because I'm just waiting for price to work itself out, and then I'll look at it once I start seeing price move the other direction. But I'm giving you an idea of what you're looking for. Initial entry into this 15-minute SIBI. Okay? The initial entry is also the same candle you want to see on that same time frame for a change in state of delivery. If it doesn't give that, then we're not looking for price moving the other direction. The other option is, okay, is there another PD array to the left that I can look for and then use a new level for a change in state of delivery? So let's assume this candle hits this buy side liquidity right here, or these equal highs. Remember I referenced these equal highs sitting right here? Let's say we hit those equal highs and it hits it in this candle. Well, now I can use this low on the 15-minute candle as my change in state of delivery. After we hit this level, if we see a bearish candle close below this level, I can confidently say price is going to move the other direction. Okay? But we have to hit that level in this candle, and it looks like we are. Looks like we'll hit it here in a second. That's how I would be treating and how I'm watching price as we move our way higher. That's what I'm looking for. Okay? Because even in this price action right here, we can't trade any of this. There's no setup that I can see. We have a high, low, higher high for a breaker, but guess what we didn't hit? We didn't hit this buy-side liquidity yet, so I would not be interested in taking this bearish breaker to the downside. Okay? We need liquidity to be ran. We need key levels to be hit before we can just assume we're going to run in the other direction. Hopefully this is helping. All right, so there's the level hit right there. So now I'm moving that level up. Change in state of delivery is moved to here. Okay, that's my level I would be looking for a true change in the state of delivery. It doesn't mean it's going to come down here. We could hit this previous day high in another 15-minute candle, and then I would be moving it because that's another key level. Honestly, it's the biggest key level I'd be looking for. Okay? That's what we're looking for this type. We're looking and reading price action as price plays out to determine what we're going to do. But ultimately, I mean, I'm not taking a trade today. We got Powell's, we have a Fed chair speaking at noon. PM price action may be better. It hasn't been horrible, but it's been definitely wicky from since 10 o'clock. Or since about, since 10:05, it's been really choppy right here. Nothing you want to play in. The last thing I'll say about the Apex code, I want to say something about it. I asked the Apex to give me a custom code because I think this code is horrendous. I mean, who wants to try to memorize ESNZUCF or SF? I mean, it's ridiculous. But basically, they said I have to have 33 purchases with that generic link. And if I get 33 purchases, then I can ask for a custom link. And then that's just going to be DTJ, Day Trading Jesus. And it will be much easier to remember for anybody that wants to use it. So if you haven't used that a few more times, guys, I would greatly appreciate it, because then I will be requesting a significantly easier code for the Apex discounts. So I appreciate your support in that, since everything else is free. Free. I don't know what's going to happen. I think we're going to run up to these previous day highs. That's really what I'm betting on right now. We're seeing order flow respecting all these order blocks here. This is a good reaction from this order block. This down close candle right here. We came into it right here, and we are rejecting it quite nicely. We have low resistance liquidity right here. I could see price moving higher and potentially running up into this high here. So dang, Mark. Thanks. So I just need what? I don't know how many I don't know how many I've gotten, but I appreciate that. Sincerely, I do. Now I want you to pass all 12 of those evals. And it doesn't matter if it takes time. Take the time to pass them, become an expert in passing your evals, and then hold, and then hang on to your performance accounts, and don't let your performance account. The mistake I made with my performance accounts was when I got my first performance account, and when I got my first performance account, I literally blew it in one day. Guys, it was so embarrassing. So embarrassing. I blew it in one day. It was ridiculous. And as you can tell, my trading has changed dramatically from blowing in one day. If you're blowing an account in one day, you're way over leveraged. You should never be in a position to blow your accounts. All right, I'm liking price action here. I think we should be running these highs. We're almost in the 11 a.m. macro time, so I want to see what happens with price. Are we going to put in a high during this macro, or are we going to accelerate to these highs through this macro? So that's what I'm looking at right now. Two minutes till the macro. 10:45 is when I start looking and considering the macro. It's also the close of the 15-minute candle. So we really would be watching this candle right here, or this level here, for a change in state of delivery. Doesn't mean you can't get a breaker within that. You could get a high, low, higher high here and be aggressive here. We come up into it and then break lower. That is absolutely an option. So something like this, where we come into here, come back up into this level here, and then break down here. That could absolutely see something like that. It's lower probability, but I think it's obviously something to consider. Give me a second, guys. I have my son standing at the door. Got my son reading The Go-Giver. So I have my kids. I have a 12-year-old, 9 and 8-year-old, and obviously, like every kid, they love video games, and so they can't play their video games until they do their quiet time, until they read a book, which they have to read 10 pages, and they do their chores, and then I have them do some math homework, summer school math homework, and then once they do all of those things, then they earn their privilege of playing video games. So I use it as motivation for them to actually do the things that I believe are skill sets for their future. John, do you take weekly profiles into consideration? 100%. Absolutely. Today is a Monday. Today is a consolidation day. That's why it's lower probability today in my mind. Also, how a weekly candle prints. Like if Monday protracts up, creating a wick, then the weekly expansion is likely to be bearish. It can be that, but it could be that could all happen on a Friday. Does that make sense? You may have that big wick higher, and it closed lower. It doesn't mean that Monday, Tuesday, and Wednesday can't be green days. And then Thursday you get your reversal day, which is the profile of Thursday reversals, and then you see the reversal play out on a Thursday. So you're absolutely right, but it's more in depth than just assuming you should see lower prices, right? You have to consider that profile. If you are going to see a weekly profile and the reversal's not till a Thursday, well, now you've been looking for bearish price action for Monday, Tuesday, and Wednesday. And I've done that before. People have done that before, and they've been burned because they didn't understand that it takes time for this to play out. And a week is so long that you could have bullish price action up till Thursday, and then get that reversal on Thursday afternoon. and then on Friday you get the continuation of it. So it's just important that you understand that the profile, there's multiple different profiles, and it's not as simple as, hey, this weekly profile right here, see that? We have this candle right here. It made this giant wick and then it closed bearish. We could see this be green all week and then change directions on Thursday. That's what you have to be careful of. And so this tells us, all right, I'm looking for bearish price action. So you go down to lower time frames and you look for the narrative. What is price wanting to try to do to make that happen? What are the scenarios for price that could show us bearish price action? So yeah, John, I'm talking about that very thing right now, like last week. So here's the daily. Here's what happened on Thursday. Okay. So look what happened look here. We got Monday, Tuesday, Wednesday, Thursday, right? Bullish, 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 bearish. So it didn't become bearish until Thursday. Same thing could happen this week. We could see bullish, 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 wick the highs, bearish, right? It could so easily happen that way. So now that we have gone to a daily time frame, this daily time frame tells me we should see bullish price action. Here's our fair value gap. Prices come into this fair value gap, and now we've been pushing higher on Friday and so far today. If we drop down to the 4-hour, here's our wick into the daily fair value gap. Price made this high. We retraced down into this 4-hour, and now we're pushing up higher again. Based on this alone, on a higher time frame analysis, I believe we should be hitting these highs. We should be hitting these previous day highs based on order flow, what it's looking like. Daily fair value gap, explosion. Retracement to a 4-hour fair value gap, explosion. I want to see it hit this. And at this point, once we hit this previous day high, now we're sitting here and we analyze. Does price want to reverse from this level and then move lower, running back into this daily fair value gap, into this 4-hour fair value gap? Or does price want to continue to push higher and then ultimately hitting these all-time highs again? My proclivity is to say we are at all-time highs, and because we're at all-time highs, we have to take into consideration that it may want to run back up here again. It may want to run back up here again, so I need to use that as part of my consideration. All right, it's 950. This is a bullish candle here. This is telling me we will be hitting this, and we should be hitting this relatively soon, unless we just get a retracement candle completely the opposite direction. But I doubt it. I think we're going to just run up here. It's going to move very quickly because they don't want anybody that has their stops right above the previous day to remove their stops. So if it's me and I'm the algorithm, I'm going to run this as fast as I can relatively without people thinking it's all fake, and grab the liquidity, grab the stops that are sitting right above here to then either run the other direction or to continue higher and grab more stops. That's how I would be viewing all of that. So hopefully that explanation is a little more in depth and gives some clarity on how I use weekly profiles. Weekly profiles are just an idea of how I should expect price to move for the week. It gives me an initial narrative without me understanding what's going on with price. Then I take that idea, I submit it against the charts, and I say, do the charts show me that this narrative, this weekly profile could play out this way? And then I start putting my pieces together. All this is done very quickly over time. You're just making these quick, assumptions based on what you're seeing with price, and then you put all the pieces together and you start looking for your model in that arena. So I'm looking for price to run up here. That's what I would want. At this point, I would not be wanting to do anything until this is hit. Okay? we did reach into another big 1 minute fair value gap, so we could see some resistance here, but ultimately I'm looking for that to be hit. Now look at this. Price comes into this fair value gap, and if we close green, and let's see, oh, we didn't close green. So we could dig more into this fair value gap sitting right here. If that closed green, that's like, yeehaw, here we come. Previous day highs. That's how I'd view that. Now, here's the thing that's messing everything up. Look at that. We got some equal lows right there. So if you're bullish and you're like, oh, that's going to hit that. Oh, look at this candle. I'm going to take it. We have these relatively equal lows that now create hesitancy in my trading to want to try to take a long here for these highs. Because we could leave that high, grab these equal lows, and then run back up to it. Absolutely, totally possible. So you have to look at equal lows and equal highs, and you have to treat them with respect. It may also mean you miss out on some opportunities, right? That's just the reality. If it's not a rule for you, then that's fine. You could still take this trade, move it, and run for the highs, but I would actually be looking to see if this low can be taken. Maybe take a trade idea off of this inversion gap right here for a short to these equal lows. That would be a real trade idea that actually has a setup for it. We don't have a setup for a long. So honestly, you would be looking for something like this and being real quick to try to move your stop to break even as soon as possible. We close here. As soon as we hit that level right there, I would be moving my stop to break even, and then I would be taking my profit at these equal lows, which would be about 15 handles. I really do like the 4 hour. I think the 4 hour is very clear on order flow. I've just noticed that. I do like it. I mean, it's obvious we come into the daily, we break higher, we come up into a 4 hour, we're breaking higher. We have right here, we come back up down into this fair value gap sitting right here, and then we move higher. And we still got 3 hours left on this candle, so it could literally wick up into this and then run the other direction because there's 3 hours on it. But when you get a closed candle, it's a very good indicator on where price is going to go. We should run these. Mistake I make sometimes is I'll go long right here. If I see a momentum candle, I'll go long right here trying to just capitalize on this obviously swing high. And the mistake, that is a major mistake many times because it could give me a nice retracement here first before it actually runs it. So if you were going to play a momentum trade, you would play it off of these two candles here. We run into this fair value gap. we respected the consequent encroachment of the fair value gap. And on the second entry, I probably would have taken a long here and with my stop at the low. So your stop, actually, your entry would have been something like that, with your stop sitting right here, targeting these highs. So that's how you would play a momentum trade. You don't take a long off of a green candle. You take a long off of a red candle or a black candle in a fair value gap. That's your safest type of momentum play. I don't take them very often. It needs to be very obvious for me to take them. But that is another way that you can play this type of price action that doesn't give you an entry with an inversion or a breaker. You literally wait for a retracement into a fair value gap that has an order block sitting to the left. So we have this order block. And then you wait for price to come back down into it. And then you take a long with your stop sitting at the low. Now, I probably wouldn't have taken this one because why? We had these equal lows sitting right here. And anytime there's equal lows in my book, these become less probable. "44 seconds till 11 o'clock. Let's see what happens here at 11. I told you that the macro time was coming up at 45, which was right here. And I said we should either see a swing high or a low put in or a swing high put in here. Or it could be what pushes and propels price to these previous day highs. And it looks like that's what's happened so far. Here's another fair value gap. It's a small one. It closed below it. It's a 2-minute fair value gap. See if price finds support at this 2-minute fair value gap and pushes higher. There it is. All right, there's our high. There's the previous day high taken. We planned on that. We expected it. We talked about order flow and how you could capitalize off of that momentum with no potential entry. You can take it off of a fair value gap, which honestly is ICT's silver bullet. So he has a silver bullet, but you have to make sure you're on the right side of the move. And this had a clear objective. We were clearly running in that direction. We wait for a retracement into a fair value gap, and we can take a long off of that. As you can see, there's not a single, I don't think there's a single fair value gap that was disrespected. When you have momentum on your side, here's a fair value gap. Price comes into it. Opportunity 1032. We don't have any fair value gaps here. Opportunity here. 1053, opportunity here, 1058. When price wants to run, it will go. And it will respect every fair value gap along the way. All right, guys, we're going to call it a day there. That's some good price reading. I'm disappointed that my trade that I took was canceled by Trade of 8, kicking me out of the trade. I took this trade right here, this short on the 2-minute. It would have been a 20 handle move to this low. So good trade if you were able to take that. Price action was a little choppy here, but cleared up, and then it ran for the highs. At this point, you should be watching whether price wants to continue higher or if it wants to reverse, using your entries only with your model when your models are presented. So I will plan on being here. I'm going to try to do tomorrow. I'm going to see if I can have somebody cover an office meeting for me. And I will try to be here tomorrow. If not, I'll be here Wednesday, Thursday, and Friday. Take a look at the code for the Apex. Apex is 80% off. I need 33 transactions, and then I can get a custom code. Because I hate the code that I got, ESNZUCSP, whatever it is. And we'll make it simple to like DTJ. So, thanks for watching, guys. We'll see you here tomorrow.